Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's June 29th. This will be our chart listen for the day. And real quickly before I forget, we'll probably talk about it as the week continues, but we'll really have a pretty much normal week. But Friday's 4th of July trading holiday, so there's no trading on Friday. Actually, it closes at noon or whatever, but you're better off not to try to trade those days. Just take them off and enjoy a day off because there won't be enough price action in most cases to even take a trade. So it's just generally a waste of your time. But anyway, there won't be any trading on Friday. So it doesn't change anything for us because Thursday's a regular day, and I'll still do a chart lesson Monday through Thursday this week, and then I'll take off probably Thursday and probably won't even come in Friday. So won't be anything Friday, Saturday, or Sunday. And I would ask you to, just hold your trading questions over the weekend because I'd like to take a little break for a couple of days and probably go to our lake house with my family this weekend and take a break. Probably won't have a chance to read much email or anything. So anyway, let's get to today's chart lesson. I want to try to keep these as short as possible, and they just keep getting longer and longer. So I'd like to keep them around 20 minutes at the most. So, but it looked like it was going to be a range day. In the end, this really just turned out to be kind of a weak. I wouldn't even say it was weak, but it was an uptrend day. Notice we had the original channel, we had a break, and we had a move to a new high with one more push, and then we kind of sold off. And then before the day was over, we took off again. All this was after 2, so I wouldn't even count that price action really for just today. We had the break, we had this channel working down, and we had just a total reversal. And then we had a break here and a couple legs up, and then we made one more push up and then kind of sold off into the 2 o'clock hour. And that's pretty normal price action there, kind of what you would expect. So if you took a target on the first move up this morning and measured from here, you got a measured move right in here. I would also, on this first leg right here, I would have measured that move, and then you got another one right here. Notice we perfect measured move, almost then it sold off, pushed up one more time, and then we had a correction. And then, oops, I got the right one. Then I'd measure that leg, and as we started higher there, you look for a measured move. You can see we pretty much got almost a perfect measured move there too. So a lot of times these smaller legs that are more near term will be the most accurate. Not always. I mean, you see these larger ones hit to the tick all the time and then reverse. But we just had a little bit of a upward bias for most of the day today. Again, it like it was going to be neutral, and you want to assume this may be a range day until we get up here around this, and you want to be careful going long into this, but it doesn't mean that you ignore this trend working up here and just start trying to go short. And that's what people will do. They'll see us trading up into this, and there's probably somebody watching that did exactly that. They started trying to pick a top up here because it's a range day. Well, when the EMA is standing straight up like that and it hadn't turned over, it's not a range day. That's a trend. Even if it's going to be a range day, that's a trend. When it's a range day, the EMA kind of looks like a roller coaster, up and down, up and down, up and down, and it goes sideways across your chart. When that EMA is pointing straight up like that or pointing straight down like that, that's a trend. Don't argue with it. Don't try to assume that prices are going to bounce. Notice we didn't even get down there. We bounced early here, and that's a sign that, hey, we may get at least a measured leg up, and we may trade higher. So people get lulled to sleep. They'll see a range day for a week or so, and they think, I got this. And suddenly they start trying to sell the highs or buy the lows, and it doesn't check up. It keeps going, and like, what the heck happened? Well, it's because it wasn't really a range day, and it didn't. That's just the way the market works, and that's one reason it takes a long time to see everything and start to get experienced at it, because it runs in cycles, and the market has a little different personalities and phases, and it'll run through one phase of being a range day every day, and then it'll switch gears on you. So trade what you see, not what you're thinking, because it will change on you sometimes. But anyway, let's get to the chart. 7 o'clock came just as it was rolling over up here, and we did have a close outside this channel and a couple of legs up, so it wouldn't surprise me if we went shorter here. So when you got this, made this new high and you try to go higher once, twice, that's a second entry long that fails, and nice bearish bar. And look how far away we are from the EMA. That's a great chance to go short. Um, if there wasn't room back into that EMA, I'd tell you don't take that trade. But the way it is right there, you can almost guarantee on a failed second entry long with that bearish bar that we're headed back to the EMA. And if you take that trade, you probably get a runner and you can ride. That's maybe the only trade you need all day, because you can ride this thing all the way down. And even if you exited here, you might be done for the day, because that's it's 30. That's about 30.21. Just down into here is 30.13. So that's 7 easy points right there. And depending on what your target is and how many points you need each day, how many you're trading, then you get a second chance right here. So even if you needed 2 trades, it might have been the only ones you needed. So anyway, this moves on down. It just keeps going. No surprise when it did. And I know there's some people that went long right here. It's not a second entry though. This doesn't break higher. And one trader told me because there were 2 matching highs, he thought that you could count that as a break higher. No. There is an opportunity where, in this case, with it trending this way, if you had 2 matching lows here, that means this move ended, and you could count that as a new low. But no, that right there is not counted as a break higher. It's just 2 matching highs on the way down. That's all that is. Unless it breaks higher, it's not a move higher in this particular direction. So that's just the first entry right there at the trend line. And it's a nice signal bar, because a lot of people are just going to buy blindly, and you see they all got burned. And it gave you a chance to get out, and then it continues lower again. But we just started going sideways, and there's a nice failed breakout. And notice what happens. It breaks above this green bar first and turns and goes right out the other side. They got them trapped right there, guaranteed. You could wait for that bar to close and still go short 1 tick below it, but I would want to go short 1 tick below this already. Once it broke higher and 1 tick and starts turning down, I've already got my sell stop right there. So if it goes on through, I'm going to get swept right into that trade. And it just drops on down. It gives you a lower high right here, but that's not a good enough signal bar on my chart. If you had a good signal bar, you may take that as a lower high and go short. And you get a failed second entry long right here, but at that point, that looked like the trend channel line, and if not, it may be the midline. So it's a little dangerous going short right there. You've been away from the EMA since way back up here. There is congestion there. Notice how there's 1, 2, 3, 4, 5 bars stacked up before you really get a chance to go short. And several of them have no bodies or real small bodies. That's congestion. Most of the times it'll break lower and turn back up. This time, in this case, it kept going because it turns out it was a 2-tiered channel, but you just don't have enough information to know that, and it's just too dangerous to go short right there. Drops on down, and then we start going sideways. Breaks lower here. If you had a good signal bar here, you might go long right there, but this is still a fairly strong move down, and we're still underneath the midline. So even if you had a good signal bar, it's a little risky, but you expect it to snap back, especially being that far away from the EMA, and it may snap all the way back to the trend line. So you may take that trade, but that's too bearish, and this is just an inside bar, and I don't recommend you use inside bars for signal bars because you have a lot of trouble with them. There's a few cases where if it's a failure or something, a trap, you might take that. And I think there actually is one on this chart today, and I'll show it to you, and you can see the difference. But don't be trying to pick a bottom on an inside bar. It worked this time, but it may not work next time. It probably won't work next time. We get a higher low here, but again, not a very good signal bar on my chart. Runs up, and you get a failed second entry short right here. You probably don't want to take this because it's so far away from the EMA. But that's a fairly strong move, and it just ticks 1 tick and turns and goes out the other side, another one of those engulfing bars. So if you want to be a little aggressive, you might go long there, but I don't recommend taking that trade because most of the times it'll break higher and go a few ticks and then fail on you and come back. Same thing here. You're just getting too far. Anywhere else up here, you're just too far away from the EMA. Wait for a correction. And, it's tempting to even go short in here, but this is a strong trend, and this trend line, you don't know if the trend line's even there yet, but when it comes back and confirms it on this second entry right here, and notice it broke lower and turned up. It didn't engulf that one. It didn't go out the other side, but just goes long on a buy stop one tick above that. And you can see they had the shorts trapped here. People trying to pick up shorts. And look how that thing rocketed up. And that's where I would look for my measured move. Measure that one. Start from here. And that would have been your measured move right there. And that thing takes off. That's another great trade. And then we just kind of go sideways until you finally get a little bounce here with a nice bullish bar at the bottom of the range. It's a little double bottom. You make a higher low here, but not a very good signal bar. Same thing here. And this bounces off the trend line, but the signal bar is not any good. So, but notice that I marked it because that's a new low, and you try to go lower once, twice. So that's probably going to trap the shorts again. And you know that it did by high. It rockets up real quick and then starts going sideways again. That burst of energy is because all these people that got short in here trying to pick another top just like they did down here. That's kind of a repeat pattern. This one doesn't fail out the bottom, but you get that failed second entry short, and it's actually a second entry long too. You could count it as one, but you really don't really want to look for second entries in congestion. But this is still a bit of a trend too, so that failure is probably going to trap people trying to pick tops. And just put your buy stop one tick above that if it does break higher, and it does. And look at it go, boom. I mean, it rocketed up, and then they kind of run through the stops, and it suddenly levels out again. There's another second entry right here at the key entry point. Not a good enough signal bar on mine. If you had a good one, go long right there. You do get a higher low right here, but you had to go long at the very high of the day, and it just kind of gaps over. I doubt you could have got filled on that, and you don't want to enter coming back here that far away from the EMA, because look what happens. And you do have a little bit of a close outside here too, so it could just reverse. But instead you get two legs down, and then it starts a new trend again. And you just don't really get a good chance to go short here. It's just too choppy and sideways, and there's no setup on this first short, and then there's no real setup to go long until you get the higher low right here. Just go long one tick above that. There's actually a failed second entry short right here, and it looks a lot like the original one down here, so it's kind of a repeat pattern. You can see how it breaks lower, but it doesn't go all the way through in one bar, so I just think it's too far away from the EMA. And notice it doesn't go far, and it does gap over, so you probably couldn't get in it anyway. Comes back, and you get a nice second entry long right here with a nice signal bar. Didn't go very far, but it was an easy scalp. And you actually get a failed break lower here. I did not mark this trade. It's not a perfect signal bar. It probably meets our 1/3 rule. So I probably should have at least marked it green. I mean, you could actually argue for that to be blue on a failed breakout. This trend line was not confirmed yet, so you didn't really have a trend line. So all you're playing is the failed breakout. And to take the first low or the first breakout without waiting on a higher low, I just want a little better signal bar than that. So if you had a better signal bar, by all means, if you had a good bullish signal bar there, take it. But I'm going to leave it green on my chart. And then notice what happens. You try to go low, short once, and then twice when it breaks lower and turns up there, just go long. Actually, I think this went higher and then came back down, so you'd probably have to wait on that to close. And you do have to go long kind of at the highs here, but we've already broken out right here. And with that trap right there, we're probably going to push up. And you can see how it rocketed up again and just kind of goes sideways. And it rockets up because they got people trapped. It's a short trap. And we're just kind of going sideways. And then you get another second entry long here. Notice this is a double top. So I'd count that as a new high. That's just one leg down, then you get the second leg down that doesn't go very far. So new high, first entry, and it pulls back. When it broke above that bar right there, that's a second entry. Just put your buy stop one tick above that and boom. And it actually gets a failed second entry short right there above the EMA. And this is one of those inside bars where it's okay because the trap occurred when it broke above this inside bar. Your safety stop still has to go below this bar though, one tick below it. But your entry would be one tick above this bar. And look at it rocket up again because they trapped those shorts right there. And we did close outside and then this thing reverses. And this was a nice afternoon trend into the 2 o'clock hour. You don't get a lot of these. But notice right here, you get a lower high here, but you don't want to trade that right into the EMA. But when it pushes through and comes back, look at that big bearish bar on a failed second entry. Technically, this is not a failed second entry long by the rules, but it's still two attempts to go higher that turns down right at the trend line. So you know they're probably going to trap some longs. Just go short one tick below that. It takes it a second. This thing drops so fast, there's even a gap right there. I mean, you don't see that much in the ES, especially this time of day. And then notice you make another low and then first entry and you get another second entry. That's the first real close outside the trend line. So you expect prices to at least try to make a new low. And so you got two nice second entry shorts. This was actually a second entry short here. This was a failed second entry long. This is a lower high, but it's also a second entry short. Now look at that low and you try to go low. You make your first entry, but then it breaks higher and turns down and goes right out the other side all in one bar. So that one bar creates a second entry short. It's a little different. It's a little more advanced and harder to see, but it's there. So if you don't understand it, I'm going to explain it one more time. Listen to this over and over. You got a new low and you break lower right there. And then it turns and it starts going higher again. But it fails in that engulfing bar and it runs down and goes out the other side. That's a great trap. And you can see how quickly it trapped people. And the bottom just kind of falls out of it until it runs out of all those sell stops from the people that have been long. And then you get another second entry short. So that is a second entry short. So don't send me an email saying, how is that a second entry short? I just explain it to you as best I can. So listen to it over and over again till you get it, because I can't put it in writing any easier than I can show you on this video. And so watch it. It goes up. You get a break right there. That's your first entry. But then it goes higher again. Normally you would get a higher low and it'd break below it, and that would be your second entry. But this does it all in one move. And it doesn't happen all the time, but it's still a second entry short. It's just a little different one. So just picture this right here, this going up, and instead of turning down right here, assume this one up, and then all of a sudden it rockets back down. That would be your second entry when it came back down past that. It just didn't do that here, so you get to enter your second entry way up here. So there's still two legs back. Notice one leg, correction, second leg, and then it turns down. So it's still a second entry. Second entries are just two legs. That's all they are. So make sure you understand that. All right, and that pretty much gets us through the day. So again, from really just after the open, it was mostly all uphill today. This trend line comes up, it gets a break, two legs up, and then you get your correction. And then we started another trend. And that's kind of the way sometimes trend days will do. They'll, this trend will play out and then another one will start up. And then that one will play out and another one starts up. And that one will play out and then another one will start up. But the overall bias of the day just continues to be up with some corrections in there. So anyway, I'm going to get this one done in less than 20 minutes or right at it, because I got about 30 seconds to wrap this up. So hope you had a good trading day. We'll be back again to do it tomorrow. I'm going to wrap it up for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.